The overall weakness in the market has shown us overall that investing in diversified index funds remains one of the best strategies ever. In this video, I'll be talking about the best ETF on my watch list right now. Quick plug, if you don't mind, like the video, subscribe to the channel, get me like 1,000 likes on this video, make it go viral. Thank you. Let's get into it. Now, for me, the best ETF to buy at this time remains the Vanguard S&P 500 index fund, ticker VOO. Now, for those that don't know the profile of the fund, it's a $760 billion fund, quite a large fund with a yield of 1.43% in dividends and a tiny expense ratio of 0.01%. So that tells me it's quite a large fund that has a very reasonable dividend and also a very low expense ratio. You want to have that in the ETF you consider. Now, one major point I would like to point out is this. Before the whole crash of the market, before the whole market decline, a lot of people frolicked into growth funds. There were a lot of stories around buying into growth stocks and everything. And of course, for those that believe in stock picking, that's not bad. But I've always said it on this channel in my numerous videos that although it seems boring, yet ETFs with a low risk profile remain some of the best investments. I've been saying that for about 10 months since this channel uploaded its first video. And here's to buttress that point right now. If we compare the performance year to date, of the S&P 500 index, which is this one in blue right here, versus the ARK Innovation ETF, which is typically an ETF that tries to invest in growth stocks, all right, which is the yellow line right here, you'll see that the S&P 500 index has easily outperformed the ARK Invest ETF. In fact, year to date, the S&P 500 index is down 13%, while the ARK Innovation ETF is down a whopping 53.18%. Now, over a longer term, so over the last 1 year, again, you'll see that superior performance in the S&P 500 ETF over the ARK Innovation ETF. Now, my point to note in this ETF is this. Although it might not move very fast like some other growth companies or growth ETFs, over the very long term, it tends to maintain a steady state return, which is why for my retirement portfolio, I definitely consider this the best ETF. There might be periods of underperformance when you look at it in comparison to other growth ETFs, but when the chips are down, you will see the returns on those growth stocks fall off the cliff and below even this ETF. So for a steady state return, which is what I like over the long term, I believe that the S&P 500 index remains one of the best you can invest in. Now, of course, all I'm sharing here are just my personal opinions and not financial advice. Let's now take a bit of a deeper dive into this particular ETF. Yeah, it's managed by Vanguard, which is one of the largest asset managers in the United States, and check out the spread of assets in this ETF. You have technology stocks accounting for about 25%, healthcare accounting for 14%, financials accounting for 13%, consumer cyclical accounting for 11%, communications 8%, industrial 8.23%. There's virtually no sector that is not represented by this ETF. Talk about the best diversification position an individual investor might be able to get into. And when we look at the profile of the top 10 holdings in this ETF, we see the household names: Apple, Microsoft, Amazon, Tesla, Google, that's Alphabet, Berkshire Hathaway, Warren Buffett's company, United Health, Johnson & Johnson, Nvidia. All these companies are stellar companies. I do foresee that they should do well over the long term, say 20, 30 years to come. So by and large, this is an ETF that I see has a very neat profile in terms of the size it holds under its management. Its fees are quite low. And also, guys, the holdings in this ETF are basically tracking the performance of America. Okay, so one other thing is this, guys. I know a lot of people like to invest based on news headlines. They love to invest based on breaking news and all that. That's one strategy. But if you invest in an ETF like the Vanguard S&P 500 ETF, you need not get carried away by the news that much, because at the end of the day, these companies that the ETF tracks, that it invests in, are companies that should do very well over the very long term. So by and large, for an investor that has a long-term focus, that is seeking to keep expense ratio at a bare minimum, check this out again, 0.03% versus the median of ETFs of 0.29%. This ETF's expense ratio is nearly 90% lower than the median in this space. Talk about that. So it's a low cost ETF that mirrors America basically. So a desire to invest in America should be met with a desire to invest in the Vanguard S&P 500 ETF. Again, personal opinion and not financial advice. Now there are other ETFs, definitely. There are other ETFs like the SPY, the BlackRock Managed ETF and all of those, and I'll be covering those in subsequent videos. So the final thing I'd like to say is this: is it a time to buy into this ETF given how this ETF has shared so much value this year? I showed you guys earlier, this ETF is down about 13% this year. Is it a good time to buy into this ETF at this time? And here's my answer personally. I do believe that for the sake of the long term, this ETF is an attractive buy at these prices. It's all about dollar cost averaging, investing a fixed amount over a long period of time, either in the IRA, Roth IRA, whatever arrangement it is, personal brokerage account, setting aside a specific amount to invest in this ETF consistently over an interval for the very long term should make an investor do quite well over the long term. Now, there are other ETFs like velocity ETFs that could triple your returns. I mean, this ETF does not give you that kind of return. It's more of a steady state ETF return. I could do other videos on velocity ETFs. For example, you have ETFs like TQQQ, ETFs that will supercharge your return if the market goes up, but will also crash your return if the market goes down. Let's check out the performance of this TQQQ over the last couple of months, so you can see exactly what I'm saying as I bring this video to a close. Okay, now over the last 1 year, check out how TQQQ has performed, down 34%. Check out year to date how this ETF has performed, down 61%. So at the end of the day, guys, what I try to do is to avoid this sort of massive drops or rises in my net worth. I like to see a steady growth over the long period of time. I like to talk about maxing out my tax advantage accounts and putting it into low-cost ETFs. That remains, in my personal opinion, one of the best investing strategies. Okay, now if there are ETFs that you would want me to look at after this video, let me know in the comment section. I will basically try my best possible to upload as frequently as possible, because one thing I've found out is this: a lot of stock pickers tend to throw out a lot of videos on YouTube, and the ETF guys, the guys that discuss ETF, throw out fewer videos. So my objective is to at least let people in on the possibility of still getting decent returns investing in ETFs rather than investing in risky stocks and ETFs that just might jeopardize someone's wealth over the long term. So that's the goal of this channel. I want to upload as frequently as possible so I can discuss these safe ETFs as well. All right, so that's about it from me in this very quick video. And hey, invest safely. Cheers.